Thanks, Ron. Thanks, John. Thanks, Pam and Linda, wherever you may be. So, as Ron mentioned, what I'm going to do is just really give you kind of a fairly comprehensive overview on what's been happening in the U.S. beverage market over the last year. And then we'll talk about packaging a little bit, and then we'll finish up with some projections, talking a little bit about what we think is going to happen in 2015. First, for those of you not that familiar with us, Beverage Marketing is a research and primarily really a consulting firm dedicated to beverages. So if we could help you with anything, feel free to chat with me afterwards or tomorrow or tonight over a cocktail. We'd be glad to help you if we can. Just to start out, offer up some initial headlines on the marketplace. Basically, there's no deflating news today. That's my football joke of the day. Everything's inflating or uplifting. If you look at liquid refreshment beverage market, which is basically carbonated soft drinks and everything that directly competes against carbonated soft drinks, that group of products increased about a little bit over 1% in 2014 over 2013. It was basically flat performance in 2013. So we saw improved performance there. And then two real factors behind that. One is carbonated soft drinks, although they declined in 2014. Their decline wasn't quite as bad as it had been in 2013. It was a pretty significant decline in 2013. And on top of that, bottled water actually had better growth in 2014 somehow, which is pretty remarkable performance for a category the size it is. And then in addition to that, and I would just say, I don't know if this is really headlines anymore because it seems to happen every year and we think it's going to continue to happen. In general, niche categories are outperforming the market. So they're outperforming the mass market through the traditional categories. And we'll go into more depth on that in a minute. And then just on the alcohol side, wine and spirits are leading the alcohol growth, but we did see a rebound in beer in 2014. The beer category actually grew after some years of flat performance. And that was really driven primarily by the craft products. Don't want to harp on the economy, but the economy does have a big impact on beverage consumption. People have more money, they spend more on beverages. They have less money, they tend to spend less on beverages. So lots of factors there. But in general, the economy's improved fairly consistently since the recession. There's been ups and downs, and it depends on your perspective or where you fit in the economy as a consumer, whether you're having doing well economically or not. But in general, the economy's improved. GDP is showing growth, unemployment rates coming down. Stock prices, particularly on beverage companies, was solid in 2014, not quite as good as 2013, but fairly good nonetheless. And the consumer is feeling a little bit better, actually a lot better than they were during the depths of the recession. So a lot of that, of course, driven by the economy. So this shows basically consumer sentiment index. It basically measures how the consumer is feeling. And as you can see, 2008, 2009, the consumer wasn't feeling too good. But gradually, the attitude, the sentiment of the consumer has improved to where it is today. Now, you might note that the level of confidence that the consumer has isn't quite to pre-recession levels, but it's headed in that direction. So consumers feeling better, and hopefully maybe even 2015 will surpass that 2007, 2006 levels of consumer confidence, which would be nice. If you look at everything that people consume that they pay for, all commercial beverages, what you see is tough year in 2009, directly related to the recession. But since then, it's been a bit of an uneven recovery. So we've had some up years, we've had some down years. 2014, growth a little bit above 1%. That's at a volume basis. If you compare volume to revenues, it's really a little bit better picture in revenues. Revenues have tended to outpace volume growth each and every year. I do think the interesting thing is, over the last couple years, increasingly, the differential between volume growth and revenue growth is narrowing a bit. So it's getting closer, but nonetheless, revenue growth has been outpacing volume growth. And that's really pretty much across the board, most categories, with probably the exception of bottled water. Now, when you group all the various beverage categories into what we refer to as LRBs, or liquid refreshment beverages, that's carbonated soft drinks, as I mentioned before, and everything that sort of directly competes against that. Traditional beverages, which would be hot coffee, hot tea, milk, or dairy. and then beverage alcohol, and then finally tap water. What you see that across the board, and since for the first time since the recession, those three groups all showed growth. LRB's up 2%, traditional beverages basically flat, but up 0.1%, and beverage alcohol 0.7%, to some extent driven by the rebound in beer. So really a good picture there. The last one I'd just point out is tap water consumption, which is down about 2%. That's one way of measuring industry health. If tap water is declining, because people in general ingest about the same amount of beverages each year, each day. So if commercial beverages are growing, generally speaking, tap water is declining. Tap water decline of about 2%, we think, in 2014. When you look specifically at beverage alcohol, as I mentioned, beer has rebounded, but it's still being outpaced by wine and spirits. Wine spirits growing in that 2 to 2.5% range, and then total beverage alcohol at 0.7% growth. We actually think beer has a shot to probably grow again this year. A lot of that being driven, again, by craft. So when you look at the marketplace by share, share of stomach, as we like to call it, or if you're in the UK, you probably call it share of throat. But just a couple key points here. One is that carbonated soft drinks have lost share over this time, over this 5-year horizon that we're showing here. Bottled water has gained share. And I know it's tough to see some of the smaller segments up here, but some of those off a very small base have gained share. So those are kind of the key developments. Over that time, tap water actually gained share, which is a bit of a historic anomaly. I expect as the economy continues to improve, the marketplace continues to improve, that tap water share will start to decline again. So there's a lot of different ways to measure, whether categories are doing well or not doing well. And one is simply by measuring who gained in volume, who didn't gain in volume. And on the plus side, the categories that actually grew in volume in 2014, you would count bottled water, bottle and canned coffee, bottle and canned teas, sports drinks, energy drinks. And then on the flip side, kind of the losers, carbonated soft drinks or CSDs, milk, fruit beverages, value-added water. I didn't put alcohol up here, but all the alcohol segments or categories would be on the plus side because they all had volume increases. Another way to measure performance is do categories improve their performance over 2014 versus 2013? And the majority actually did improve. Bottled water, CSDs, energy drinks, milk, RTD, sports drinks, value-added water, all did perform somewhat better than they did in 2013. Only fruit beverages and RTD coffee in the non-alcoholic realm performed worse than the previous year. So when you look specifically at this LRB or liquid refreshment beverage market, what you see is really, to my point earlier in that headline, is that niche categories, generally speaking, are outperforming the market. So you have ready-to-drink coffee, energy drinks, RTD, and sports beverages, all with very healthy growth. But carbonated soft drinks with a 1% decline, fruit beverages with nearly a 3% decline, and value-added waters, which is really niche, but nevertheless it had nearly a 5% decline. Bottled water, really I would call it a traditional or mass market beverage with nearly, or actually over 7% growth, 7.1% growth in 2014. So the interesting thing is niche outperforms mass market or traditional categories. Big brands are a little bit under duress. Now, this is 2013 data, but my suspicion is as soon as we get all the actual brand data in, you'd probably see something vaguely similar to this for 2014. So if you look at the top 10 carbonated soft drink brands in 2013, the majority of them, 9 of the top 10, actually declined. Beer brands, the majority of them decline. And even in spirits, which has been a growing category, you see 4 of the top 10 declining. So brands that are really trying to sort of be almost all things to all people, having a tougher time today, smaller brands, more nimble brands, nichier brands are outperforming the market. Some of this is because the categories that these products are in have declined. Carbonated soft drinks are declining and beer declining. But also it's kind of the big brands syndrome in which big brands have struggled a bit in recent years. And our expectation is that they'll continue to struggle. Now, innovation has been really at an all-time high in recent years. We had a dip during the recession, but we had generally a positive trajectory in terms of new products coming to the market. 2014 seems to be a little bit of a laggard in terms of product innovation, but certainly much higher than what we saw during the recession. So you're seeing a lot of competitive products coming to the market. This basically shows you new SKUs or new stock keeping units. So it could be a brand new product or it could be a new flavor. It could be a new package. But but it represents something new coming into the marketplace. And the general trajectory, as I mentioned, is a higher or more positive introduction as the shelves get more and more crowded, increasingly crowded, and the marketplace gets much more competitive. Now, I think one of the interesting things to point out before we get into each individual categories is the industry, particularly on the non-alcoholic side, is taking a lot of lumps, criticism because of imparting empty calories and too much sugar content and things like that. But if you look at all the LRBs and you aggregate them and you convert that volume to calories, what you actually see is a really good picture for the industry in terms of health and wellness and caloric consumption. So there was a high point at 2000. The average person consumed 263 calories per day from a refreshment beverage. And in 2014, our preliminary number indicates that's just a little bit over 197 calories today. And our expectation is that's going to continue to decline. And that's really driven by the growth of bottled water, but also the more low-calorie options in the marketplace in different categories. So that gives you kind of an overview of the market. And what I want to do now is talk about the individual categories spend a minute or two on each of them. And then, as I said, then we'll jump into packaging a little bit, and then we'll finish up with some projections. So carbonated soft drinks declined in 2014, but in a way it was good news because the category only declined 1%, which was an improvement over the 3+% decline in 2013. But it did mark the 10th consecutive year of volume declines for the category, which is pretty remarkable considering it still is the largest category in the US based on a consumption basis. And if you looked at it from a per capita perspective, the declines go back even further. They go back about 16 consecutive years of decline. So it's a category that's had a rough time, and as you can see, the trajectory continues to be negative, and our point of view on that is it's likely not to improve anytime soon. We think the category is likely to have continued declines. Now, from a revenue standpoint, it's a brighter picture from an industry standpoint in that revenues have basically remained flat as volume has declined. So higher prices in the industry have resulted in basically flat revenue change. So it's a little bit brighter picture for the key industry players from that perspective. One of the things people thought about maybe 5, 6, 7 years ago was that diet soft drinks were going to be kind of the savior of the category, and that the category would probably have flat performance because people want healthier refreshment, and in theory the diet products are healthier because they're zero calorie. But really the reverse of that has occurred, and diets have actually underperformed the market, and in the last couple years fairly significant decline, 6% in 2013, 5.5% based on our preliminary numbers for 2014. And as you can see, diets have lost share of the market. 2009, they were about 31%. 2014, looks like they're going to be under 28%. And it's really interesting is that it appears to us at this point that regular soft drinks actually increased in 2014. So it's surprising, and it'll be interesting to see what happens this year if that was just an anomaly or a beginning of a trend where regular carbonated soft drinks grow again. But if you can't stabilize the diets, because they're more than a quarter of the market, you're going to probably likely continue to have those declines unless the regular increases are that substantial that they can change that. Now, there's a lot of talk in the industry about new artificial sweeteners that could improve the fortunes of the diet segment. And there's a lot of noise about stevia, and there's some products out there with stevia. Zevia is a carbonated soft drink that actually its whole premise is that it's made with stevia as a sweetener. Pepsi and Coke have entries into the market. They're more mid-calorie type products because they're also sweetened with sugar. Coke Life, Pepsi True. And then you have some of these other products there. There's still some taste issues with stevia, some aftertaste issues, but the benefit is that it's a natural ingredient. And the belief is that consumers, if they can get a natural, zero-calorie, good-tasting sweetener, it could bolster the diet category. The trick with stevia has been good tasting. There's still, like as I said, some aftertaste issues, so you really haven't seen the impact on the marketplace. But that's kind of the biggest news, I'd say, right now when it comes to the diet products. The other thing going on in CSDs is kind of a new interest in craft-type sodas. So I think the soft drink companies are looking at what's happened in beer. Obviously, craft is very successful in beer, and is it possible that could be replicated? There are certainly a lot of new companies on the scene, so a lot of new brands in the marketplace. Some of the kind of traditional products that you would think of is more premium type products. You would use craft and premium, super premium interchangeably here, because it always does come down to a question of what definition is. But some of the more mainstream traditional ones are basically flat to down in performance, but the newer ones in aggregate are growing, so the craft segment is starting to grow. And I think the big companies are looking at this. Is this part of a trend? Can it be replicated like the same successes we've seen in beer? So it's an area of potential growth for CSDs, but again, not to the point where it's actually impacted the total category. As you can see, the total category continues to be down. So the other point of innovation that we see in CSDs in terms of dispensing equipment. Now, the first two, the Coke Freestyle and the Pepsi Spire, are primarily for food service, and they're already in the marketplace to one extent or another, and they allow you to pour a dispensed product with more than 100 product combinations. So you can combine different flavors, and you can really create your own customized beverage with those products. The other is a product concept that's really not in the market yet. It's a home dispensing concept created by the Green Mountain Keurig people. There are home dispensers on the market, products like SodaStream. But this one is a little bit more interesting because it has the backing of Coca-Cola. Coca-Cola has taken a 10% stake in the Keurig Green Mountain Company, very committed to this concept. And the question is, can it take off? There's been home dispensers before, and the results of them have been mixed. But Keurig is saying, we can deliver the beverage cold. It's going to have carbonation. There's no CO2 canister in the system, which has been an issue with past home dispensing systems. The product will be perfect, perfect dosing, good mix of syrup and carbonated water. It's sustainable because there's no packaging really involved except for the small cartridge, and a vast brand selection. So people in the home can drink, somebody can drink a Dr. Pepper, somebody can drink a Diet Pepsi, somebody can drink a Coke Zero. You don't have to be drinking the same product necessarily. Pepsi isn't in on this yet. They're looking at it, but this is really right now a Coke focus. The launch is supposed to be coming fall. The reason I mention it, because we're at a packaging conference, if it took hold and if it was successful wildly, it could conceivably impact the packaging market because you'd have, in theory, fewer cans and bottles in the marketplace. One consumer survey out there said about 21% of consumers were seriously interested in that. Whether that would translate into buying a system or not is a question that remains to be seen. But that's the interest level there. We just did some estimated numbers that we threw down on paper just to hypothetically put something together. 120 million households in the US. Let's say 5% of them purchase one of these systems. So you'd have about 6 million machines in use. Let's just, again, we're sort of making numbers up here, but I think they're reasonable numbers. Let's say the average household does 1.5 servings a day. You'd end up with 3.3 billion servings based on the current US population, which translate into 150 million cases. And that really is beyond CSDs. They're going to do all types of cold beverages. But if you think of it, an industry that has billions upon billions of cases, this is still pretty small. So this could be an underestimate, it could be an overestimate, but I think it's a reasonable estimate. And it doesn't really, it speaks to Keurig. I mean, I imagine if Coke is successful at this, Pepsi also would get extremely aggressive and do something too. So I guess that could be some additional volume there. But it's something to watch. So why have CSDs been declining? Primary reason we think is people don't view them as healthy refreshment, and the movement of the market has gone toward healthier refreshment. People, want to feel good about themselves. They want to be eating and drinking things that are better for you. So that's one issue with CSDs. The other issue is simply it is the biggest category. People want variety. They don't want to be drinking the exact same product throughout the day. So there's some switching involved. Tap water and economy are kind of one and the same issue. I think that's less of an issue today than it was a couple years ago, but there was an issue with the economy. I think the primary issues are health issues and issues of variety. People want variety, and they also want healthier refreshment. Another issue probably impacting the category is price. Not that CSD prices have taken off, but bottled water pricing has been extremely aggressive. And if you look at the difference between the two, and if consumers go into a store and they compare the two, bottled water becomes a great value option for consumers. So I think that's also having an impact on the carbonated soft drink category. And that does bring us to bottled water. Really kind of a shocking performance almost in 2014. Had incredible first quarter of the year and a solid year altogether. 7% growth on a category that's north of 10 billion gallons is pretty phenomenal. And when you pull apart the market, we look at it the way the Industry Trade Association looks at it. It's basically 6 segments. It's the single-serve market, which is 1.5 liter bottles and smaller. It's the bulk market at retail, which is basically 1 or 2 gallon jugs. It's direct delivered, which is primarily all water cooler business. So that's 5 gallon jugs more often than not. Vended water, which is refillable vending. And then also domestic sparkling and imports. But the key category, the key segment within water, to me anyway, is the single-serve PET market, which is 2/3 by volume of the bottled water business. And if you looked at it by dollars, it would be even a higher share, probably north of 70%, because those other retail, bulk, direct delivery, and vended are considerably less expensive. Interesting things to point out here. In each of the last 2 years, all 6 segments of the category have shown volume growth. Usually there's a laggard. Usually there's one that's declining. But all 6 segments have shown growth in each of the last 2 years. And we had double-digit growth in domestic sparkling and in imports. Now, it's off a very small base. Domestic sparkling only accounts for about 3% of the total bottled water category. Imports only about 1%. But solid growth nonetheless. And domestic sparkling, I think, is interesting because that could be a consumer moving out of carbonated soft drinks, viewing them not as healthy, but they still like their carbonation. So some of them may be moving to sparkling-type bottled water products. Again, that single-serve retail market here, it's about 7 billion gallons in 2014, 8% growth. So it grew faster than the total bottled water category. And it has gained share. It accounts for about, as I mentioned, about 2/3 of the volume in the category. Very aggressive pricing has helped to boost the category, but also the positioning as a health and wellness product. So while stable, PET water pricing continues to be historically aggressive, and that's likely to remain so at least through 2015 and probably beyond that. You have very high-speed bottle filling lines, particularly in the more advanced producers of bottled water. They can produce product in a range of 15 to 18 million cases per year per line. Stable to declining resin costs and continued bottle lightweighting. So all those things have come together to make producing a case of bottled water fairly inexpensive, particularly when you compare it to other beverage categories. So it's a significant thing, and one of the reasons we think bottled water really is performing so well. So part of that aggressive pricing, really, when you think about it, is come about because of the ascent of private label water. So if you go back to 2009, if you just look at that PET water segment, about 84% of that was branded. Today, about 66% of that is branded, 44% is private label. So private labels had enormous growth over this time. And basically what it tells you is there's much less brand loyalty in bottled water than there is in other consumer products categories, and beverages in particular. So consumers want water that they can trust, that the taste is good, and they think the quality is very high. They want it in the right package. Some people are picky about the closure. Some might want a sports cap, some might hate a sports cap. But brands aren't necessarily high on the pecking order. They want a brand that they can trust, but they may not, run down the street if their favorite brand isn't in their store. They'll probably buy what's on hand. So thus you see very strong growth in private label in that PET water market. One of the signs of the future is the fact that if you look, and this is actually a year old now, in 15 markets, in grocery stores, bottled water already outsells carbonated soft drinks. So I think it's a sneak peek at the future. We're projecting actually sometime in 2016, bottled water is going to surpass carbonated soft drinks as the #1 category in the U.S. on a volume basis. But it's already happening in specific channels in specific markets across the country. So I think it's just not a matter of if, but more a matter of when. And we think by the end of 2016, give or take a quarter, that's likely to happen. Now, you hear a lot about the value-added waters, which are the enhanced waters and the flavored waters, but the reality is their performance has been fairly lackluster, and I think part of that could also be due to pricing. If you compare the value-added waters, even though there's been a lot of discounting there, they're still priced at a fairly significant premium to plain water. So when you look at the market as a universe of, say, water beverages, I guess I would call it, so single-serve water plus the value-added waters, which we include flavored and the enhanced. About 5% of the market by volume are these value-added or enhanced waters. And then if you do it by revenue, it's a little bit higher. It's about 15% because they are priced at a premium. And as you can see, the percent change numbers, the enhanced been declining, flavored basically flat. All the growth really has been in the single-serve market of plain water. So we'll move on to fruit beverages. It's another category that's been a little bit under duress in recent years. You see 5 straight years here of volume declines. And basically, the category is suffering from very strong competition from other categories. For the most part, high prices. Chilled orange juice is pretty expensive. And actually, even though the category itself tends to have a bit of a healthy halo, if you start looking at the label, you realize calorie content's fairly high, sugar content's fairly high. So in spite of the fact, a bit of a healthy halo, it still has some negatives. So we're seeing performance that looks, almost similar to what's happening with carbonated soft drinks. There's a lot of ways to slice and dice the fruit beverage marketplace. One of them is by 100% juice versus juice drinks, but it really doesn't matter. You see declines in 100% juice, you see declines in drinks. Today, 100% juice accounts for a little bit more than half the market, about 54% of half the market, but that really hasn't changed much in the last 5 years. One of the things that's driving a little bit of growth in the category, but not enough to impact the overall category, is really the high end of the market. These high-pressure pascalization juices also have cold-pressed juices in the market, but they're very expensive products. You see them often for a single-serve package north of $5 per serving. In fact, some can be $10, $12 per serving. But the benefit of these products, in theory, is that they possess a really good processing system in that they extract the highest quality juice from the fruit. So in theory, people willing to pay more are getting the best juice possible. Again, I think it's a growth area, but because it's so small, there's certainly a limit on it because of the high price point. So it's only going to go so far, and I'm not sure at this point whether it can impact the growth of the overall fruit beverage category. Kind of too early to tell. So sports drinks are up next. Basically, that's Gatorade and Powerade. Those two brands alone really comprise the category. They're north of 95% of the sports drink market. Actually, I don't think any other brand is available nationally, and if they are, it's probably through health clubs and things like that. But the category is growing. Not a lot of going on there right now. Modest growth, but again, it's positioned well. Active lifestyle consumers, health and wellness consumer. So you see modest but not overwhelming growth. Energy drinks, which are at times lumped together with sports drinks, actually a different category altogether, seeing growth in the mid to high single digits in that 5 to 7% range, priced at a strong premium, and really in some ways they're glorified carbonated soft drinks, but with high energy offering ingredients that make them appealing to consumers. I mean, I think the key is they basically deliver on their promise of added energy. So they've been successful with consumers. Retailers like them because the price points are high. Distributors like them and brand owners like them as well because the price points are high. So we think this category is still a little bit underdeveloped, going to continue to grow. Key brands in the category would be like Red Bull, Monster, and Rockstar. Those would be the 3 biggest. So moving to tea, what you really see all the action in tea is primarily on the ready-to-drink side, the bottle and can side. If you look at loose tea, bagged tea, and tea mixes, it's a bit of an underwhelming picture, flat to down. Modest growth, mid-single-digit growth in RTD tea, but really it's a great category from a standpoint of positioning, certainly positioned well as a health and wellness category. Seeing growth on the high end of that with new products coming into the marketplace and a lot of variety of different types of teas, white teas, red teas, green teas. So we think it's a strong category. I think it's going to continue to grow and a lot of interest there. The total ready-to-drink tea market in the U.S., about 1.5 billion gallons in 2014. Growth was modest, but a little bit better growth than it was in 2013, about just under 3% growth. Worth looking at right now. Again, very healthy position category. You would think that if there's an opportunity or a strong opportunity for ready-to-drink tea, there would be an equally strong opportunity for ready-to-drink coffee, bottle and canned coffee. Really hasn't played out that way. I think one of the reasons for that is it's so easy to get coffee, made to order, custom to order at a Starbucks or a Dunkin' Donuts, wherever you get it on the street. And the challenge really has been developing a mass market ready-to-drink coffee that can appeal to a broad swath of consumers. So that category, small as it is seeing decent growth, as you can see here, about 8% compounded annual growth by volume. But again, very, very small category. And our expectation is it likely to have growth, but likely to remain significantly smaller than ready-to-drink tea for the reasons I mentioned. About 87 million gallons in ready-to-drink coffee. The big success story there really is the partnership between Starbucks and Pepsi with their Frappuccino and double shot type products. They have probably about 85% of the market. Others have tried, but they haven't been quite as successful. But they've really dominated to date. Don't really think of milk as a refreshment beverage, and it's certainly not alcohol, but I put it in here really just to complete the picture because it's a big part of what people drink. And, virtually almost all American homes have milk in their refrigerator, although more and more are having these milk alternatives. Track record for milk in recent years has basically been on a downward trend. We've seen 5 consecutive years of volume declines. If you looked at this more historically, this is actually almost modestly good performance because it's flattened out a bit. There were more sharper declines going back decades ago. The milk category kind of feels like they've taken a lot of abuse, from milk alternatives and people questioning, is it good for you? Is it value? So they started a campaign, Get Real, Milk Truth. It's more of a social media campaign. From an advertising standpoint, they're really focusing on protein. So milk as a great source of protein. You'll see that mostly in print ads, print campaigns. For the most part, it's a category that is a bit underfunded from a marketing side. And the ancillary campaign that they have going is they're touting chocolate milk as an energy source. So they know energy drinks are growing strong. They're saying drink chocolate milk. You can get energy from chocolate, so chocolate milk. But that hasn't really moved the needle that much either. So anyway, tough times for the milk category, but they're doing some things, and we'll see if that, how that works for them. So just briefly on alcohol, beer category, as I mentioned, rebounded in 2014. A lot of that rebounding has come about because of the popularity of craft beers. Lots of craft beers on the market. There are about 3,000, closing in on 3,000 craft breweries nationally. The question is, how high is up? How many can there be? Is the marketplace saturated? Is it not saturated? I'm not sure I really know the answer to that. But the volume continues to grow, and it grows at a pretty sizable pace. So my expectation is as long as the marketplace continues to grow, as long as consumers like the craft experience, we'll continue to see new craft breweries come into the market. As you can see, the last 4 years in a row, craft beer is growing at double-digit pace, the low double digits in that kind of 11 to 14% range. And again, this is sort of why the carbonated soft drink companies think that there may be an opportunity in craft soft drinks because they've seen what happened in craft beer. I don't know if it's a perfect analogy, but there are some comparisons that probably are worthwhile, at least worth exploring, particularly since the mainstream carbonated soft drink category is declining. But our expectation is, at least for the next couple years, we're going to continue to see solid growth in craft beer. Now, wine and spirits have actually been a better picture than beer. Solid growth, consistently solid growth. I think wine definitely appeals to an aging consumer, so you have that large swath of aging baby boomers. And it also appeals to some extent on the spirits side to a bit of an aging consumer, though spirits has kind of reinvented itself, particularly with all the flavors it has in the marketplace. So it also appeals to somewhat of a younger consumer. So it's broadened its demographic. So really a good story on both sides of those. They've done a good job. They've probably done a better job in general of the beer category in recent years of marketing themselves. So if you look beyond those traditional categories we just talked about, there is some innovation in these kind of niche categories. And the bottom categories here are a little bit more established. The probiotics, the energy shots, coconut water, kombucha, all been around a while, but they're all continue to grow, although energy shots has flattened out a little bit. The top row of products are a little bit more speculative, though they're all in the marketplace. Seeing a lot of innovation around plant-based waters. Basically, it's water that comes out of plants. It could be cactus water, it could be maple water from a maple tree, and that they claim to have more nutrients than just regular water. So whether it's going to take hold with consumers, I don't know, but there are a number of products out there that fit the bill there. Aloe vera, seemingly better for your skin. And then these functional products that tend to have very specific functional benefit. Most of them tend to be a full line of products. So always a lot of innovation. The question is, do consumers want the products, and do the products actually deliver on what they said they're going to do? So you kind of have to wait and see with some of these. But usually one or two of them does break through. Coconut water certainly on the bottom there has been, it's a bona fide category and been quite successful in recent years. The thing you have to keep in mind, while a lot of those categories or segments is where all the greatest growth is, they're quite small when it comes to overall aggregate volume. So if you add everything together that people consume and you look at these small niche categories, they really only account for maybe 2% on a dollar basis of the whole industry. So it's kind of a trade-off. Significant growth, but extraordinarily small base. So you need a lot of them to have anything meaningful in terms of your portfolio. I just spent a few minutes talking about packaging, beverage packaging, obviously specifically. So you saw that chart a number of slides back on product innovation, and as innovation has increased, new products and SKUs have increased. And really, a similar type thing has happened with packaging. A lot more targeted packages, a lot more packaging configurations and options coming to the marketplace. And really, if you look at it and size it, you don't see huge changes and swings. This gives you a look at what's happened in terms of packaging units in the U.S. beverage marketplace. Basically, the big winner over the last 5 years is probably, if you talk about specifically packaging materials, has been plastic. Cans have lost a little share. Glass basically flat to down a little bit. But I think it really speaks to the categories they're strongest in. If you think in terms of plastic, extraordinarily strong in bottled water, that's a growing category. Cans, very strong in carbonated soft drinks and beer. Those categories have struggled a bit. And glass, again, very strong in beer, but has struggled a bit too. So I think the performance primarily in packaging, these packaging materials, is really more of a reflection of what's happened in those categories than in the packages themselves, though I guess that's something you could debate. One of the interesting things that happened in CSD, some innovation, were small pack sizes you've seen, 8-ounce cans. And it's a bit of a trade-off from the industry, but I think probably a net positive. So recently we've seen these smaller packages enter the marketplace, generally increasing gross profit per pack, but impacting volume in a negative way. So you get fewer ounces per purchase, fewer dollars, but a higher profit margin. So a bit of a mixed bag, but I think the industry is working to target consumers as best they can because they're losing them. So you're seeing innovation along the lines there. Packaging innovation has gained an importance in the marketplace, has gotten more crowded, and is a means to distinguish both categories or brands. So obviously, a lot of categories will go into a certain package to kind of distinguish it on the shelf. Coconut water went into that aseptic drink box kind of package, which has really become its identifier in the marketplace. Energy drinks in that thin line can initially with Red Bull. So you see a lot of that, and then as time goes on, the categories develop. Consumers basically give them permission to move into other directions from a packaging standpoint. Generally speaking, brands often tend to be identified with a particular packaging material and often indicative of the package in which the brand was launched. So in glass, you can think of many of these key beer brands like Red Stripe and Corona. It really jumps out at you. That's their key package. Certain beer brands and energy drinks and Arizona tea, for example, in cans and aluminum cans. And in plastic, certain products like Gatorade, Palm Wonderful, Vitamin Water, and others. And then some of them, particularly more established ones, you see more hybrid approach, particularly with the beer brands and the big carbonated soft drink brands. So just want to finish up with some projections on where we see the marketplace heading in 2015. And basically, to our point, we really think that the future is going to continue to be, and greatest growth, with the exception perhaps of bottled water, is likely to be in the niche brands. The niche brands are lower volume opportunities, but they tend to be a little bit more premium priced, so their profit margins can be a little bit better. But in general, we think the future and the greatest growth is likely to come in that upper left quadrant, where you have a little bit lower volume and higher growth. So 2015, what we see is interesting carbonated soft drinks, a little bit difficult to project. We don't really know what's going to happen with regular soft drinks, but we think it's going to be a similar year to 2014, down about 1.2%. Bottled water, likely to have a very solid year. We don't think the growth is going to be quite as strong as 2014 because the growth in bottled water in 2014 was pretty remarkable. And that growth is really going to be driven by that single-serve PET segment because volumetrically it accounts for such a huge part of the total bottled water market. Fruit beverages likely to continue to lag. RTDT, sports drinks, energy drinks, all likely to continue to have solid growth, with energy drinks probably being the best performing of that bunch. Value-added water, we don't really see that turning around right now. We think that's going to continue to decline. And if it's very small base, we think ready-to-drink coffee is going to have mid to upper mid-single-digit growth. And then finally, on the alcohol side, we think you're going to continue to see modest growth in beer this year, up maybe about 0.7%. Again, driven to some great extent by craft beers. Wine and spirits, we think, are going to grow in that 2 to 3% range again. So total net growth about 1.5%, which is really very comparable to what you saw in 2014. Difficult to project if there's some be some dramatic innovation that comes about. But generally speaking, you usually know about those things before they happen and before they take hold in the marketplace. So if there is something, it's probably not going to impact till later part of the year. So that's where we see the market today. Thanks for listening. And if we have time, I'd be glad to answer any questions.
Thank you very much, Gary. As tradition, we have microphones floating around the room. We'd be happy to get you on the mic. If you are shy and rather write down your question, please feel free to pass it to us. So now's your opportunity. Gary, I do have a question. You didn't mention craft distillers. You mentioned craft brewers.
Right.
But there's a large growing segment of craft distillers. How does that enter into your equation?
I think, right now, from our perspective, it's almost, it does exist. They're out there. And, the question always gets, how do you define a craft distiller? I mean, Tito's vodka is extremely popular now, but I would argue it's probably not a craft because it's so big. But I think the craft spirit segment is extremely small. But I think there's a market for craft regardless of the beverage category. So you're going to see it. And I think it's going to be more successful in some categories than others. But at this point, I would say it's really still somewhat in its infancy. So much smaller than certainly than beer, and just really starting to take shape.
Gary, I have several questions, but I don't want to dominate this. So if you have some questions, write it on a piece of paper and move it to the side. Here you go, John.
John McNall, DAC Americas. You shared some of the material outlook in terms of the past growth rates for plastic, aluminum, glass. Any forward-looking trends or any growth rate comments in terms of what material is going to form the packaging? Yeah,
for me, the way I would look at it, I'd look at it based on what's happening with the categories. So water, we think, is going to continue to have really strong growth, and that's going to, likely to continue to propel bottled water. We think carbonated soft drinks are likely, unless there's some breakthrough sweetener or some other big disruptive development, are going to likely continue to struggle. So that could probably negatively impact cans, could also negatively impact plastic a little bit. And then on the glass side, it's interesting because really, if you look at all the categories, it's really, beer is the key place, for glass, I'd say. And so it really, and craft has obviously done a lot there. So that's a positive for beer. So I'd say you'd have some growth there. Although it's kind of interesting. Some of these craft guys, in order to differentiate, you're seeing increasing numbers of them come out in cans to kind of differentiate themselves. So it's a bit of a mixed bag. But I guess what I'd say at this point is probably similar trends going forward to what we've seen. Better growth in plastic than in cans or glass.
Hey, Gary, I'm a little surprised you were talking about the decline in diet drinks. Why is that compared to the regular stuff? That's counterintuitive. By the way, this is Michael Corafo. Go ahead.
Thanks, Michael. Yeah, I think it is a little bit counterintuitive because you would expect that people would want 0 calories. And obviously, there's a lot of people out there still drinking diet drinks. But I think the issue is, are the sweeteners natural? And I think there's taste issues with some of the sweeteners. They're not natural. That's why there's interest in stevia in spite of its issues of taste. So I think the key is the industry's trying to find an all-natural, good tasting, sweetener that tastes as close to sugar as possible, which is easier said than done, that that they can manufacture at a reasonable price and has good stability and shelf life. So all those factors are in play, and it's been tougher to develop, than you would expect. But I think you're right. Intuitively, you would have thought better performance by diet, but I really think it's reached a ceiling, and I think that a lot of these consumers have completely moved out of the carbonated soft drink category to other products, maybe like water.
Okay, Gary, one from the crowd. The impact of flavor enhancers on tap water, bottled water consumption.
I think they've had a net positive impact, particularly on bottled water. I mean, tap water, you would have to put tap water in a container and then the flavor, or a glass and the flavored enhancers, and likely you'd be doing that at home. If you're on the go, you're more likely to use bottled water for that. I think they've been a net positive, but I couldn't put a number to how well how much they may have increased the marketplace. But I think they've been a net positive, because the only complaint we ever hear about bottled water is that it can be boring. Other than that, people love it. It's healthy, no calories, and nothing artificial. You can't go wrong, right?
Gary, we have about 5 more minutes of questions, and I have at least 5 questions. So this is rapid fire. You cannot drag out your answer. Of all those niche categories, there could be a breakout. Everybody's looking for the next Red Bull. What's the one that's going to break out? Name me one.
Well, I could cheat and just say coconut water, because that's been successful. I think it's, honestly, I'm almost going to punt on this one. I think it's really, of the ones that haven't broken through, I think it's really, really difficult to say, because you just don't know what's going to catch the fancy of the consumer. And I think that there's a lot of issues with them. I think a lot, and then how do you define successful? That's the other thing. It's not going to become as big as carbonated soft drinks. So I think you're going to have a number of successful that emerge, but I think that the expectations have to be kind of lower. I know you wanted the short answer, but I think volume opportunities for these, they're going to be small volume. So I think the definition of success has to change. I think products can be successful, categories can be successful, but the volume opportunities are going to be smaller than what we've historically seen in a lot of the others, and so the definition has to change.
How about all that extra money I have in my pocket now that I'm only paying $2 for gasoline instead of $5? Am I going to take that into the convenience store and walk out with a carbonated soft drink?
I think that's definitely had an impact on what consumers are spending. They
already
have more
seeing
money.
that then?
Yeah, so we've already seen that. So I didn't mention that, but that's definitely had an impact in the marketplace. And if oil prices continue to stay where they are, that's more money in people's pockets. So it would have a net positive impact.
Two short questions. This is Dan Reisman. You didn't mention SodaStream. I guess there was an announcement they signed up with the Coca-Cola, I believe. And this is in the category of personalizing the drinks or supplementing carbonated soft drinks individually. It is any magnitude or any effect, or SodaStream?
Yeah, well, SodaStream sort of, if I understand correctly, sort of blew up their model. They wanted to they want to dispense cold products, so they don't want to be limited just to carbonated products. And they have been trying to partner with either Pepsi or Coke, and Coke opted for Green Mountain. Pepsi's been a little more measured or standoffish when it comes to the home dispense market. My sense is, by their actions, they may be less enthusiastic about it. So the question is that how real is that market? How well is that market going to do? I mean, on the plus side, you can argue both ways. On the plus side, you've seen huge success with the single cup brewer coffee, right? But it's different than soda, because you have to make coffee anyway if you're going to make it in the home, right? So it's not like soda, it's pretty easy to buy in a store and bring home. So I think there's an opportunity there, but I also think it's much smaller than what we've seen in coffee. And SodaStream itself, I'm not sure what's going to happen with them. Their earnings the last couple quarters, I don't think have been very strong.
And one short question: the water, this private label, single serve water. It is a shifting of existing capacity. That just the name is changing, or this is added capacity in the industry. You see what I mean? Where is this private label coming from?
It's added capacity. It's added capacity.
It is added capacity.
Right.
Gary, Mexico put in a 1 peso per liter tax. How long before we see that in the United States, unless we stand up and fight it?
Well, there's been attempts to tax soft drinks, and there's been attempts to restrict consumption. I mean, Mayor Bloomberg, illustrious mayor, former Mayor Bloomberg in New York.
Your mayor.
My
Your
mayor, my former mayor, he wanted to do that. I think he realized that was not a great idea, but I think he wanted to make a statement about what, so that got thrown out. I don't know if it's going to happen. I think generally speaking, from what I've seen, people don't like those. They don't like being told what to eat or drink. They know what they should be eating or drinking, but they don't like to be told. So I think the support with people, if that counts for anything, which I think it does, is against that. So my feeling is I think you'll see, there's been attempts in certain cities, and maybe you'll see it here and there, and more liberal type places. But I think in general, we're not going to see that happen.
Okay. One last question in the last couple minutes we have. It's amazing with the smaller packaging that the brand owners have been able to increase the profitability per package and so on. Is the consumer really that slow? How much longer can they ride that? I mean, the price per foot ounce is usually written on the shelf facing. Do you expect that will be able to continue much longer, or will this just continue to depress down?
I think the consumer is willing to pay more if you deliver to them, what it is they want. And so if that's the package the consumer wants, and if it's in, I think it's a consumer that has a certain level of disposable income where they're not that concerned of, $1 here or $1 there, and if that's the package what they want, and then they're going to buy it. So I think that, I don't think that matters that much to that consumer. So I could be wrong, but I see that as an opportunity.
Thank you very much, Gary.
Sure. Thank you.